Welcome to Karmen's Couch. Karmen's Couch, y'all. What is Karmen's Couch? Karmen's Couch is a conversation with business owners and entrepreneurs about how they achieve success and overcome adversity, right? So on today's conversation, we have my homie, y'all, Mr. Corey Singleton. Corey Singleton, you all, is the Executive Vice President and Loan Officer with Inspire Mortgage. Corey is also a real estate investor, you all. Welcome, Corey. Welcome, sir.
Thank you. Thank you for having me. I made it to the couch.
You made it to the couch.
I'm so grateful for the invitation.
Thank you so much for coming. I appreciate your time and you coming in and just having a conversation with me.
Absolutely. We just talking.
We just talking. And what better way to talk than to talk on the couch, right? What better way? So we're going to dive right in, Corey. Take us back. Y'all know that you are the VP of Inspire Mortgage, but take us back to your childhood. How did you grow up?
Okay. All right. So I don't know if many people know this, but I was born and raised in Louisiana.
Oh.
Small town called Shreveport, Louisiana. It's about 2.5 hours from Dallas. So that was like the next major city. Mm-hmm. We grew up what we call the country. I mean, I had chickens in the yard, all kind of animals. I had a pet horse. Her name was Cricket. Tripped her one time riding her. She rolled over on me.
Oh, wow.
So, I moved to Chicago as a teenager. My mom got remarried and we moved up here. Mm-hmm. I finished high school here. And so I like to think that I kind of got the best of both worlds.
Yeah.
The country living, Shreveport is a slower town. And then here in Chicago, obviously busier, fast paced. So, it's the perfect mix of city and country. Mm-hmm. So, obviously now I've spent more of my life here than there, but I go home often and most of my family's still there.
Most of your family. Do you have any siblings?
I do. I have several siblings. I have a sister that we have the same mother and father.
Okay.
I have 2 stepbrothers.
Oh, okay. And
I have siblings on my dad's side. Papa was a little bit of a Rolling Stone.
All right.
So I got Dre, I got Taylor, I got
so
Shannon.
That's a lot of you. Okay.
Yeah.
Okay.
But I'm the oldest of all. So.
Oh, wow.
Yeah.
How's it like being the oldest?
They
call you for money. Since you the money man. Oh, I forgot to mention, y'all, he's the money man. The money man, Corey Singleton.
Yeah. So regarding that name, that name doesn't mean I have any money. It just means that you come to me to get the money that you need to buy your house. Uh-huh. But, being the oldest, I do take a bit of responsibility to impart and share in ways that I can. But, my sister, she handles her own, she's got her stuff together. When she was we graduated from the same high school. She was a few years after me, but, as she grew up in high school, I took her to the credit union, made her open her account, helped her buy her first car, build her credit. And I think she's doing better than I am. But when I can, I impart.
That's good. Now, when did you enter into the mortgage industry? What year?
So I got into business in 2001. I started at the ground level, data entry. I worked on the operation side, though, not the sales side. You remember Washington Mutual? Mm-hmm. So they got bought out by Chase. I started data entry at Washington Mutual. This was when things were booming. It was like a refi boom. Got my feet wet. Now, ironically, I got into the business because I've always had a passion for real estate and real estate investment. It's always been intriguing to me. You see those infomercials with Carlton Sheets. I'm probably dating myself.
Oh, okay.
But you watch those real estate investing infomercials with Carlton Sheets, and it just piqued my interest. And I've always had an interest through high school. And so I jumped right in data entry in 2001 to learn the business, learn how to operate. And I would go through the files and look at it, all the data, and figure out how the deals were getting structured. And then in 2004, that's when I crossed over and got into the sales side.
Okay.
I started with a small brokerage in Schaumburg. And that's where I, got my roots. worked at a couple of other places in between. Obviously, the crash came in 2008. A couple of years were very, very tough. You know, I stayed true to it. The money was really, really low. Had to, you know, hustle to keep, you know, make ends meet. But we got through it. And in 2010 that was a turning point for me. I was at the Wintrust at the time, and they did a sales event, a sales seminar. Mm-hmm. And I was like, hey, this is kind of do or die for me in the mortgage industry. Either I'm going to make this thing work, or I'm going to find something else to do.
Right.
And I committed to it, did everything that it said, and my business kind of took off from there.
So you've seen some of the worst times in the mortgage industry. Normally when people become a real estate investor, they get their real estate license, you know? Why did you decide to go in the direction of finance instead?
It's a good question.
Your broker's license.
I wanted to know how the money works, mm-hmm. because you know, strategic leverage that's my thing. You know, how do we use other people's money to build wealth ourselves? Mm. And so I wanted to know how the big boys played and learn how the money works. So that's why I chose to go on the mortgage side as opposed to the real estate sales side.
Okay, that's awesome. Now, take us back to your very first purchase as a real estate investor.
So it was collaborative. So you know, I used my first purchase as my primary, but also my first investment. That's what I encourage everybody to do. That first, anybody that wants to invest in real estate, that first purchase is key because mm-hmm. it's the catalyst to every other investment that you want to make.
Absolutely.
So it was a multifamily in Auburn, Gresham. It was a 2-unit. I bought it distressed. I got it for $63,000. Mm. I put $90,000 into it, so I'm about $150 in, right? Mm-hmm. Got it completely remodeled, rented out. I still own that building today. Now, obviously, I've made more purchases since, mm-hmm. But that building has been the catalyst to every other property I've purchased. I refinanced it. I was able to extract some equity, use that equity to cover down payment because most people don't realize you do need some capital when you start talking about investing in real estate, but it provided the capital for me. And mm-hmm. it's been almost like a piggy bank that I can tap into over the years to make the next move.
So how old were you when you made that first purchase?
I bought my first purchase at 23.
23? Wow. Yeah. Wow. Yeah. I was 27. I bought a 4-unit building. I still have that 4-unit building. But as you stated, you know, it's the catalyst to help purchase your next property. It helped me to purchase my condo that I live in. So it's key when I work with first-time buyers, when they ask me, okay, well, you know, do you think it's better to buy a single family first or multi-unit? Multi-unit first, you know, especially if you're a single person, you know, you don't have any kids or anything, you know, it's always best to, in my opinion, buy a multi-unit first.
Right.
Yeah.
And I, on top of that, I encourage a renovation product because now you get the experience because really the value comes in taking some. Now, obviously you get a good deal on a multifamily, you can cash flow, but the equity piece was important to me. So I wanted something distressed that when I finish it, it's not worth what I got in it, it's worth way more. And that's how I was able to extract the capital out of it. So utilizing programs like the 203K, the home style renovation loan, that's vital in my opinion.
So at 23, you had that mindset. Like, where did that come from?
Yeah, I've been ambitious my entire life.
Okay.
I don't know. I guess, you know, from growing up, my family, hard workers. You know, they really believed in work. You know, my grandmother, who's like my favorite person in the world, we had some land growing up. I was 9 years old. I tell this story all the time. She had me cutting like an acre of grass with a push lawnmower. You know, at 9 years old, I wasn't even tall. I'm not tall now. So imagine me at 9. I wasn't tall enough to be at the top of the lawnmower. Aww. I had to put my head between the lawnmower, and so I would put a rope around it to keep the little thing. You know, it's fancy now, but you had to hold it down. So I put a rope to keep that down, and I'm below it on the second bar pushing the lawnmower. And she'd have me cutting, and she'd say, "Hey, it's hot. You know, Louisiana heat is different." So she's like, "Take a break, give me a glass of water, relax for a minute, get back out there and finish cutting that grass." So the work ethic was put at a very young age, and it just kind of transcended to the workplace. And then obviously, another strong influence in my life is my stepdad. He's taught me quite a bit, and actually, instilled quite a bit, both mentally and spiritually as well.
Yeah, that's awesome. In your opinion, what are the key factors to consider when evaluating a potential real estate investment?
Okay, so you work backwards. For me, I work backwards.
Okay.
I start with the ARV, or
after rehab value.
Yes. So I trust my real estate professionals for that. I definitely value my professionals. It doesn't matter how long I've been doing this. I don't know that piece like I know finance, right? That's my lane. So I'll reach out to my real estate professionals when they bring a deal, and I want to start with the ARV. What is this property worth when fixed up? And then I work backwards. I have a pretty good idea to determine how much is going to be needed to bring it up to that par, that to ARV. And then from there, it's just an equation for me. I want to leave at least about 30% equity in there. So I'll take the ARV, multiply it by 70%, subtract whatever it's going to cost me to renovate it. And that whatever number is left, that's my max acquisition. Other than that, if the numbers don't work there, I walk away from the deal. Obviously, location is always is key, but I think sometimes we get excited on location and we'll overpay because of location. At the end of the day, the numbers have to work, whether it's a regular market, a hot market, a not so good market. If the numbers work, you can survive.
Numbers. So you looking at those numbers from what time period, in terms of within the last 6 months, within the last year, so how far back do you go with the numbers?
Okay, so the mortgage experience makes me approach it like I know an appraiser would approach it. So on an appraisal, they have to pull comps within the last 90 days, within a half a mile radius. So we start there. Let's look at what sold in the last 90 days. Let's look at whatever's in the half a mile. If there's nothing comparable, then we can go back 60 or 6 months or 180 days and a mile radius. So it's just kind of like those parameters. Start here and then see what's there. If there are enough comps in the last 90 days and a half a mile, that's what I use. I go with what's there, the data that's there. I don't base on, let's say, projected ARV, current ARV.
Exactly.
And I probably would put about a 5% variance in there too.
Exactly.
As a cushion.
Yeah. Now, I've heard a number of horror stories, right? Of new investors coming into the market, having challenges, not having the right team. What are some of the challenges that you had to overcome as a new investor, like going back to 23 and from then even to now? Like, what are some of the challenges and obstacles that you had to overcome?
Discipline. Because once you get into it, you get excited, you get anxious, and you want to make sure that you don't make bad purchases. I always, like, now I can speak confidently, but I say it now, like, hey, you don't make money when you sell. You make money when you buy. Okay. Because if you buy at the right price and you do your numbers, you know where you're going to end up. A lot of people fail in a couple of areas. They overpay coming in the door because they don't know their numbers, or they get excited. All right, they got approved. Let me find this first deal. They're so anxious to get in that they don't pay attention to the numbers. So that's the biggest hurdle, I think. Number two, which might be a close second, would be the contractors. This is where a lot of things go south. Properly vetting your contractors and having accurate numbers when assessing what it's going to take to renovate that property. And then you got to determine what the renovation is going to be. Because if we're looking at comps that's at the top of the market, then you got to do a top of the market rehab.
Absolutely.
Right? So you can't cut corners on your renovation, on your rehab, and think that you're going to hit the top of the market when it's time to sell or get an appraisal.
Absolutely.
So having contractors that are detailed, if I may, this thing, and I see it now, not just as an investor, but I see it with the investors I work with. I work with a lot of first-time investors that come to me, and even some seasoned ones. I get bids that say windows $4,000, and it's like a pause. And I'm like, I say, hey, so how many windows are there? Right? Like if you get a bid and it doesn't even break down the material and the labor, yeah, I mean, you can even get more granular with materials and you can get more granular with labor. But if you just tell me windows $10,000 or $4,000, that's not a contractor I can trust. Because where did you get that number from? Well, you should be able to say, well, look, you got 10 windows. I buy the windows for $200 a piece. I'm gonna charge you $150 per window. That's how I want my contractor to present a bid to me.
Nice.
And if they're not doing that, then I don't even want to work with you.
Wow.
Know your numbers.
Yeah. That's key. It's key to have the right team. How did you develop the right team? I mean, again, you have these stories where you hear so many people having challenges finding the right contractors. Was that a trial and error for you as well?
Yeah. Oh,
yeah.
Oh, yeah. I've lost lots of money.
Yeah.
Yeah, I've been burned. Yeah, absolutely. That is not something that just magically happens. It really is trial and error. Obviously, podcasts like this where you get the data information, you're bringing on reputable people, people with resumes, and they have recommendations.
Right.
So I've built it over time, but don't get me wrong. Yeah, I've made some costly mistakes.
Yeah.
Absolutely.
Yeah. And some ways that you would encourage, again, a new investor getting into the business on how to try to hopefully prevent some of those same pitfalls and challenges would be, again, have the right team, have the money man on your team, the contractors and yeah.
You have to, it starts, I mean, I trust my real estate professionals. You guys, it's amazing, and we don't have to get into this, but what's going on now legally regarding real estate brokers is just, it's
they don't see the value in us.
It's unbelievable for me because as an investor, I cannot be successful without you.
Right.
I lean on you and your expertise. You know markets, you know neighborhoods, you know trends, right? You can predict these things even because you're the boots on the ground. And so I don't make a real estate investment without consulting my real estate brokers, my real estate professionals. Right. I need it starts there. And I trust you all's numbers. Obviously, you need a great lender that's going to get the money to the table with the best possible terms. Yes, you need a reputable contractor. And in many cases, you need legal counsel to make sure that the deal is structured properly.
That's great steps to follow. What are in what ways do you think that we can leverage to build an empire to help us to create wealth? What ways can we leverage?
I'll say first and foremost, and this is almost like a bad word with some people, collaboration.
Okay.
I've done many projects on my own and by myself. And I can tell you, by far, they've been the most difficult, and some of them have been total failures. But the projects that I've done with partners and with others through collaboration, we've had a greater chance of success because it's more than one person.
Right.
I don't mind chopping it up. We're stronger together. We're better together. I think we have to look at collaborating more so now than ever. Because sometimes to even get in the game and make big moves, you gotta to play with the big boys, you gotta bring it.
Yeah.
And individually, you may not be in the position to do that. You may not have the capacity, but together, collaboratively, you can make things happen. So, excuse me. That's number one for me, collaboration. Number two would be strategic leverage. It's one of my favorite terms. Knowing how to get the most out of the money. And again, that's why I got into business. It
break down strategic
leverage.
Yes, strategic leverage.
Okay, it's using other people's money, right? But it's crunching the numbers. I've had investors who only use cash because they said hard money was too expensive. But then when I went back and I broke down to them what $200,000 of their own cash would do, how far they could go with investments versus if you let me use that $200,000 and we use strategic leverage, how much more you're able to do and how quicker you are able to scale, and then I break down what that bottom line looks like, they quickly convert and say, okay, I understand that. Because, we get caught up on the minutia, and we focus on the fees. Oh, that rate's high. Oh, those points are high. Yeah, but you're using somebody else's money, but you're putting up a fraction of your own. But the impact that it has on your profit is minimal. So I focus on what we call a cash on cash ROI. In other words, how much cash do I put up versus how much cash I get back? Not, quote unquote, how much profit I make.
Okay.
I just want to put my money to work. And so the more capital you have available and accessible, the more leverage you can use so you're able to scale.
Okay.
That's strategic leverage.
Okay. So using your money, but not as much as of your money.
Exactly.
Right. Okay.
Exactly.
Okay.
Yep.
And using more of somebody else's money. I like that, using somebody else's money.
Absolutely. Now they have a vested interest in you too. And so they will work with you to make sure and ensure success.
What are some ways that you think we lack knowledge as a people that's keeping us from bridging this wealth gap? Is that strategic leverage as well? We're still at the bottom in so many, areas, and we want to break in, we want to break through, we're doing little things, even myself, right? But how do we get to a place where we can truly, bridge that wealth gap, in your opinion?
That's a great question. I actually think about it a lot. And one of the reasons I took the position with Inspire, because I wanted to begin to shift from just me originating and to begin to train and help more people. And recently, the Sheba report, State of Housing in Black America, came out about a month or so ago. And you're exactly what you said. We are at the bottom of the totem pole. And it's really disheartening to see that and hear that statistic. And so it makes me think, well, what can we do as industry professionals to help? And I think it's a collective effort. We have to change the narrative. Number one. One thing I get all the time as I pre-approve people, those that actually do qualify, instead of thinking from a long-term and an investment perspective, it's an immediate or instant gratification. Now, you're a first-time home buyer, and I know you probably hear this way more than me. If I'm a buyer, I want everything that I want. That might not be the best move for you. Right. It's your first purchase, not your last. Right. You got to enter this business and enter into this industry thinking long term, not that I'm going to buy this one house and that's it. Right. No, you can build even. I've been able to accumulate and acquire by simply moving every couple of years, changing my primary and maintaining that property that I bought a couple of years prior. So I think that's mindset more than anything. Yeah. That's education. Yeah. Not like formal education. Right. But a different mental perspective. And we, as industry professionals, we got to help with that narrative. Yeah. Teaching them first-time buyer programs and thinking long-term, as you stated. It's not your first purchase. It's not going to be your last purchase, right? It's your first, but it's not going to be your last. Right. Think about even 5 years from now. Right. Where would you like to be? You want to grow, right? You want to grow, you want to expand. And initially that education, and having the right professionals up front to help them to expand their thinking, to think outside of the box. Like, okay, this is just the beginning. Right. It's just the beginning. Yeah. So it's mindset, man. It is. It's mindset. We have to shift our mindset to think bigger. 100%. And thinking bigger doesn't necessarily mean buying bigger. Right. Think bigger means I can start with this starter home that is extremely affordable, accelerate my payments, have some equity, and now I can convert that to my first rental and buy again in a couple of years, or I can sell it and roll over the capital to another purchase. Right, right. Wow, it's so much that we can do in terms of this real estate game, and it's available to us. It is. It's available. I mean, just go back to the times that we didn't have these opportunities that we have. Right. What do you think we can do to help educate more of us, to help and to present these opportunities to us? Because we're all on social media. How can we
just get the word out to more people, I guess.
Well, Carmen's Couch is one way.
Yeah.
So, hats off to you and what you're doing. I think this is one of the keys to being able to do it is to put the information out there. Obviously, in 2024, the way information is given is different than how it was 10 years ago. And so this is a great platform for it. But it's got to be more like us. Mm-hmm. And what I mean by that is I'm not going to speak for you, but I think we're beyond the point of doing this just for dollars and cents.
Right.
We actually want to have an impact. We want to help change people's lives, and we want to make a difference within our communities. And so it's got to be more of us that's not just selling out for the dollar. And we take a stance on saying, hey, let me be impactful with my profession as well.
Yeah. So you recently joined Inspire Mortgage. Yeah. How's that experience been? You were with Guarantee Rate, right?
I was at Guarantee Rate before I left. Yeah.
So what's been the difference? What's been the change now that you with Inspire Mortgage?
It's been quite a difference, actually, and it's full circle. It's come full circle. I started with a small brokerage when I first got into business. I went to a bank. I went from bank to retail. Retail was both Loan Depot and Guaranteed Rate. Great experiences. I planted my roots on the bank side with Wintrust, so those were my three main companies that I really became a solid loan originator. But with the industry shifting after COVID and the rates going up, oftentimes, and I haven't said this on camera since I made the move, retail shops aren't in the position to pivot because they're huge. We're talking about the number 1, number 2, and number 3 retail companies in the country that I've worked for. So they're massive and extremely successful. Right. So I'm not saying this in a negative way, but how long does it take to move a ship? Right? Versus a little, what do they call it? A little doogie or whatever they call it, the little small boats, dinghy. That's it. The little dinghy. I can move it. I could almost turn a dinghy on a dime. So now I'm back to the broker where I have more autonomy and more control over pricing and even the process in which we're able to provide for our clients. Yeah. And so it's come full circle. I've enjoyed the move. We've been extremely hands-on, and my team has been in full support. They've had their challenges, nobody likes change, but I think overall they understood the vision, and what I'm grateful for is that they trusted me. They know that I wouldn't be making a move that I didn't think was for the better of everybody.
With the change coming July 1st, by the hands of National Association of Realtors, what are your thoughts on that?
I think it's going to be a challenge to navigate, and here's the reason why. Nobody's talking about the mortgage side of this. I think about things in the full picture, because if not only is this going to create more of a barrier for our first-time home buyers and those looking to purchase, if they have to come out of pocket with commissions, how do we navigate this on the mortgage side? This is now an added expense. Now our closing costs increase. Now our clients have to show even more money to bring to the table. So what is the mortgage industry saying about this? How do we navigate? How do we show this on our loan estimate and closing disclosure? Where does this fit? Where does this, this new commission, where does this fit in what we call a QM, a qualified mortgage? Is it going to be included in a high cost loan calculation, or is it exempt? And if it's exempt, then why is it exempt? So there's a lot of things that I think need to be discussed from an industry's perspective, not just from the real estate piece, but from the finance as well. Yeah. So I personally think that this can't roll out and be enforced yet because there's not enough. The I's aren't dotted, the T's aren't crossed. Yeah.
I mean, obviously, they're saying that we can still offer a compensation, but just not on the MLS. Right. You can offer it on your website. You can, offer it directly to, as you communicate and negotiating with the broker, we can offer compensation that way. It's just, they don't want it it's prohibited from being, listed on a MLS listing sheet. Yeah. And so, yeah.
I think what's weird, and I think my investors will agree. As an investor, as one who's bought and sold property, I know the value of both the listing agent and a buyer's agent. Right. Because in totality, when you think about it, the listing agent, if you list a property for me, your interest is my interest, right? So if a buyer came to you, now you're conflicted as a listing agent because your loyalty lies with me. I gave you the listing, right? But you're supposed to, how can you truly rightly represent the buyer too in their best interest? When your loyalty lies with me as a seller. So as an investor who's bought and sold, I understand the value of both dynamics. And so at the end of the day, I wouldn't have a problem giving you enough compensation to share that with an agent who then brings that buyer, because there's value in bringing that buyer too. Right. So again, that's why I think there's still a lot to be unraveled with this lawsuit and what's going on and the regulations that's rolling out. But I think it's a lot of emotion right now. And a lot of people are kind of overreacting. We got to just relax. Take a deep breath, calm down, and let's work through this.
I've started to have the conversation even before, because there were still talks about it, and then it hit how that NAR wanted to settle. But I have began to have the conversation with sellers when I list a property in the beginning, as well as having the buyers consultations with buyers saying, hey, right now I'm paid by the seller's broker, but that could change. And I have begun to see compensation declining. It go from 2.5% to now 2%. I'm starting to see a lot of that too. So it's like I'm trying to prepare myself as well as my agents with what's coming and the shift that's coming to have those buyers consultations, because at the end of the day, I mean, I can go and sit in front of a seller and have to present my listing presentation and have to, sell my services. Right. Now I'm going to have to sell my services to a buyer. And now it is going to cause some agents to have to work, because, okay, you want me to pay you 2.5%? You don't even answer your phone when I call you,
I can't check out any showings.
I'm finding all the houses myself, whoa. But see, then it does, with the way our system is set up and, the use of the internet, buyers do come across and find a lot of their properties, you know?
So we're on the couch because you doing
this some
real talk. I will say this, and this happened with Dodd-Frank in 2011 with the originators. We experienced that heavy regulation that you all are now experiencing. But what comes out of it, I think it separates the weak from the strong.
Absolutely.
The skilled from the unskilled.
Right.
And so that's always the silver lining in things like this is those that really hone their craft and know what they're doing and are good at what they do, they'll exceed, they'll get through this, and it'll weed out those that are just kind of fly by night. They're just in here trying to, hustle out some side money or think that real estate is just all glitz and glamour.
Listen, I try to
we
tell
don't be
them,
in the trenches.
I'm trying to tell, this is not for the weak.
It's not.
It is not for the weak. This is not part-time,
Right.
Every time I come across a new agent, I ask them, what led you into real estate? Why did you want to get into real estate? And, I like to look at houses, I like to help people. I'm like, baby, what have you overcome? Tell me about how you have got knocked down and had to get back up a couple times.
Because we're problem solvers for sure.
Problem solvers, psychiatrists, we're all of the above, therapists and all of those things, So we'll see. We'll see. Hopefully it won't get approved because, it hasn't been approved as of yet. But I'm hoping that it doesn't. And, again, there are going to be some changes, but, it will likely weed out those who, as you stated, who are just in it and not really servicing the clients the way that they should.
Right.
And, because if a seller complains and says, why am I paying this buyer's agent to bring a buyer? You have to understand the value of a buyer. Let's go back to your motivation in selling. You want to get to, you want to move out of state because your family's there, you move for a job. What value do you put on that buyer? How much does a buyer cost to you? What is the value of that buyer to you?
Right. Agreed.
So yeah. We will see. We will see what's going to happen come July 1st, honey.
It's going to be interesting for
so
sure.
Tell us, you have something exciting coming up April 17th. What's going on?
April 17th. Okay, that is soft opening week for my latest venture. My partner and I came together about 2 years ago.
Okay.
And we decided, we saw an opportunity in what we feel is a great market, and that for some reason investors and entrepreneurs have not really tapped into. And so we made a commitment that we were going to put emphasis and effort to build and develop that particular community. So on April 17th, this is real estate only though.
Okay.
For that night, we're doing a soft opening at the Embassy Cigar Lounge in Flossmoor.
Awesome.
For all my real estate professionals.
Congratulations.
Yes.
So that is a new venture that you tapped into. You like cigars. Y'all like this. You all like smoking those cigars, honey. First time I went to a cigar lounge was in Atlanta, and God bless everybody who pick up and move to Atlanta. That's just not my thing, right? But they love cigar lounges down there. I mean, that's the thing.
Yeah, it's big.
What do you think happened that now this is just, you say it's not an area that many entrepreneurs have tapped into, but I see so many that are just starting to.
Well, I was speaking specifically of Flossmoor.
Okay, gotcha.
And the amount of financial influence.
Okay.
In the south suburbs and economic, the opportunity is there, but there's not a lot of business in Flossmoor. But specifically in that space, yes, it is growing. And ironically, Karmen, 30% is a female demographic.
You did tell me
ladies
that.
Are getting into it now.
You did. Ladies
it's kind of sexy.
Those cigars. I don't know.
It's kind of sexy. So
my throat.
We'll be doing some classes and some training on how to properly smoke. During that soft opening week, we actually have a ladies brunch that Sunday. So maybe you want to come out.
So it's not just cigars. You all are serving food.
It will be full service. We've partnered with a food company, and we've partnered, with some third-party vendors, so that you can get the full experience. Experience. You can come in and you can enjoy a cigar. You can enjoy something good to drink and something good to eat, and of course, most importantly, the ambiance and the people.
I know a few people who are going to be really excited about that. That new cigar lounge is coming. So we're excited for you.
Yeah, it's pretty exciting. It's been 2 years in the making, man.
2 years, yeah. What else you have going on that you have that's exciting? What do you see yourself in the next 5-10 years?
Well, we want to scale that business for sure. I think over the 2 years of putting this thing together, we created a scalable business. We're already scouting the second location.
Nice.
And I think we found our niche too. We want to look at the affluent minority areas in the major cities. I think we've kind of, because they're underserved. Mm-hmm. And it's hard, to figure out why. Like, we know that the revenue's there, the money per capita is there, but underserved. So we want to provide that service. My partner has been in the hospitality space for over 20 years, successfully built numerous concepts and restaurants. And so that's, with the partnership between that, and obviously we want to help inspire, grow, and be a staple in several states. We just got our license in Texas.
Oh, my, congratulations.
I have some connects in Texas, so that was important for us to get that. So we looking to expand. Inspire Mortgage, and so between Inspire and Embassy, those are my two babies.
You're busy.
Yeah, that's enough to keep me busy.
So your collaborations, if someone like myself, one of my goals is to own a hotel. So I kind of have an entryway into partnerships and collaborations in the hotel industry. Any other industry, what would you suggest would be, how can investors collaborate? In what ways can they connect to come together to collaborate on different projects? Like, how do you meet some of your business partners?
Yeah, it's a synergy. But ironically, you say that. That's one reason why we did the cigar lounge. The partners that we have and the resources that we were able to, and the people we were able to partner with and collaborate with, we met in the cigar lounge that we're currently a member of. Ironically, it's the love of the leaf, and so one of my mentors, he really is an advocate, because what it does is he says it slows you down. We're hurry, rush, especially, in our industry. Yeah. Phones ringing all the time. We're going here, there. You're doing showings. I'm pre-approvals. Yeah. But when you're in a cigar lounge and you're enjoying a cigar, you have to slow down. You got to engage. And that's when the magic really happens, because you're able to have conversations with people and make real connections. And then you find out where the camaraderie is, or where the compatibility is. And so I can see then, okay, well, you as we're slowing down and just having conversation, you may say something and it just clicks, like, Karmen, would be great to collaborate on this or that. Or maybe it's not me. Maybe it's someone that I know. Maybe it's an associate that I know, and I can put you together. Yeah. But that is a result of the power of the leaf, and that's one of the things that it slows you down so you can have meaningful conversations and relationships that lead to business.
Well, I'm gonna have to.
Come on.
I don't know. Through. That's the cigars, man. I give you a little buzz, just a little bit.
Just a little bit, But I will say this:
if my throat be sore for the next 3-4 days.
Yeah, you hitting it like something else, something you put in a cigar.
We gonna edit that part out.
Yeah. So, but our establishment, we spent a lot of time on ventilation. That was very important. Please. We built this out for the ladies, and so whether you smoke or not, you would absolutely feel comfortable coming in. Okay, for sure.
I'm excited. Congratulations. I know you've been working on that for some time. Yeah. You told me a few years ago that you were opening up one, so I'm proud of you.
Now we're finally
here.
I
can't wait. I will be there April 17th.
Yes.
Awesome. So I appreciate you coming on today.
Okay. I'm glad I made it. I made it to the couch.
You made it to the couch.
I've been watching Ellen and I said, okay, I'll get my chance. I'm here.
Man, you have such a wealth of knowledge. You are extremely smart in the money game. I mean, if you all are looking for anyone that can, again, break down the numbers, because he is the numbers man and the money man, so I appreciate you. You don't know that I think about, some of the conversations that we've had, and even some investments that I'm looking to do in the near future. So yeah, you're making a difference.
Thank you. I'm happy to hear
you're making
that.
A difference.
You're definitely making a difference.
And you're seen. You kind of low though. You stay on the low.
I try.
I like that. That's cool. Nothing wrong with it. Yeah. So I see you've been working out a little bit. What's going on? What got you in the gym?
I've been putting some time in. I'm actually down like 10 pounds. I'm feeling good. Yeah, you just health and wealth. Your health is first and foremost. If you don't have that, then you can't enjoy the things we're working so hard for. So it's at the top of the priority list for me, especially with all the things that we're doing. So yeah, I've been really locked in to eating right, spending time in the gym, and trying to, mentally, physically, and spiritually be sound.
Yeah. So
awesome. Thank you.
Congratulations. Well, I thank you so much for coming on today.
Thank you for having me.
Thank you all. I appreciate you for tuning in to the conversation with the money man, Mr. Corey Singleton. How can they reach you? How can they find you? Social media? How do you want us to reach out to you?
Yeah, follow me at CS The Money Man on IG. That's probably my main account. Always, you can hit me on my cell phone. It's rung about a million times while we were sitting here. 708-372-4669. But yeah, or go to InspireMortgageLLC.com.
Awesome.
To be found.
Thank you so much, Corey. Appreciate you.
So happy to be here.
Thank you. Bye. See y'all next time on Karmen's Couch.